Are you ready to take your first step into the world of real estate investment? Getting started is easier than you might think. Real estate investing can open doors to financial opportunities you never knew existed. Where do you begin? Today, we have an interesting topic for those who want to begin their adventure in real estate investment. If you're a beginner or someone who wants to get better at this, our complete guide is full of important tips. So let's start exploring real estate investment. Understanding real estate. Real estate, well, it's like a big living puzzle made up of land and everything that's stuck to it, like houses, trees, and buildings. You've got three special words to remember. Land, that's just the dirt. Real estate, that's the dirt and all the stuff on it. And real property, that's when you really own a piece of the dirt and what's on it. And when folks want to make money from this puzzle, they play in three main zones. Homes for people, fancy places for businesses, and big spaces for factories and warehouses. It's like a game with many pieces, and understanding them all helps you play it right. How real estate makes money. Value appreciation in real estate. It's like watching a time machine where your property becomes more valuable as years go by, like an old friend gaining importance over time. And where you put your house matters a lot, like finding a good spot for a campfire. Then there's rental income, which is like money coming your way while you relax. You get paid just for sharing your property with others. To make more of this money and keep it flowing, you need to be good at managing what you spend and making the most of what you earn, just like handling your pocket money smartly. Real estate wholesaling. Real estate wholesaling is an excellent entry point for beginners. This strategy involves identifying and securing properties under market value and then assigning these contracts to end buyers. As a wholesaler, you don't actually own the properties, but instead make money by adding a fee to the final contract. The key to success in wholesaling lies in building a robust buyers list. This list consists of investors actively looking for their next real estate deal. Wholesalers typically engage in lead generation campaigns to identify these potential buyers through marketing strategies like email outreach, social media marketing, or direct mail. Building and maintaining a strong buyers list ensures that you understand the preferences and requirements of your investors, making it easier to match them with the right properties. One of the most attractive aspects of wholesaling for beginners is that it doesn't require a significant amount of capital to get started. While you may need some financial resources for marketing and good faith payments, you won't be directly purchasing properties, which makes it a relatively low-cost entry strategy. Additionally, wholesaling allows investors to build a reliable network and develop a profound understanding of their local real estate market. Real estate prehabbing. Real estate prehabbing, a variation of house flipping, is an attractive strategy for those who want to ease into real estate investment with minimal risk and financial commitment. Prehabbing involves making minor upgrades and improvements to a property, just enough to enhance its visual appeal without undertaking significant renovations. These upgrades often include cleaning, painting, and improving curb appeal through simple landscaping. The primary focus is on properties with structural integrity that require basic touch-ups and cosmetic enhancements. It's important to choose properties located in areas with potential for growth or in neighborhoods with increasing desirability. What sets prehabbing apart is its ability to offer a quick return on investment while keeping expenses relatively low. The goal of prehabbing is to create an attractive package that can be presented to potential buyers, demonstrating the property's potential without incurring significant costs on extensive renovations. REIT investing. Real estate investment trusts, REITs, are an accessible way for beginners to start investing in real estate without directly owning and managing properties. REITs are essentially companies that own income-generating real estate. By purchasing shares in these REIT companies, investors can benefit from regularly paid dividends, which can provide a source of passive income. Researching publicly traded REITs and evaluating their records is essential when starting with REIT investing. Understanding a company's anticipated growth and the current dividends, as well as funds from operations, FFO, is crucial in making informed investment decisions. While REITs are somewhat similar to investing in stocks, they often offer above-average dividends. They are an excellent choice for investors who want to diversify their portfolios and enjoy returns without the responsibilities of direct property ownership and management. REITs are well suited for beginners, offering solid returns with relatively low risk. Online real estate platforms. Online real estate platforms, also known as real estate crowdfunding platforms, have revolutionized real estate investment. These platforms connect developers in need of financing with investors willing to finance real estate projects through either debt or equity. It's a mutually beneficial arrangement where investors can enjoy the benefits of real estate investing without the complexities of direct ownership and management, while developers can secure the financing required for their projects. However, it's essential to be aware that financing real estate deals through these platforms can be as risky and speculative as direct property investment. Due diligence is crucial before engaging in any transactions. Investors often receive distributions on a monthly or quarterly basis, and they can choose to invest in individual projects or portfolios, allowing for geographical diversification. Yet, there are potential downsides, such as illiquidity, as investments can have lockup periods, and investors may be required to pay platform membership fees. Purchasing rental properties. Becoming a landlord by purchasing rental properties can be a reliable way to generate a steady monthly income. If you buy a rental property at the right time in a favorable market, you might be able to cover your mortgage, maintenance, and repair expenses with the rental income, potentially leaving you with a profit. The level of involvement as a rental property owner is flexible. Landlords who prefer a hands-off approach can delegate their responsibilities to property managers who handle the day-to-day operations, including tenant relations and maintenance. On the other hand, some property owners prefer a more hands-on approach to cut costs and maximize their rental income. One creative approach to rental property investment is house hacking, where you occupy one of the property's units or rooms and rent out the remaining space. This can help you qualify for a residential loan, even if your intention is to earn rental income from the property. Real estate syndication. Real estate syndication is a collaborative approach to investing in real estate, ideal for those who want to pool their resources with other investors to identify and acquire properties. This strategy involves two primary roles: sponsors and investors. Sponsors are responsible for searching for potential investments, securing contracts, and often managing the properties. They typically don't contribute capital to the investment, but instead bring valuable skills and expertise to the table. In contrast, investors in a syndication deal fund the acquisition and cover additional costs, such as renovations or repairs. Investors play a more passive role in the investment and receive payments over time, typically in the form of monthly or quarterly returns. The syndication aspect of the deal comes to fruition when the exit strategy is executed, which may involve renovating and selling the property. Sponsors receive an agreed-upon amount for their work in the deal. Real estate syndication allows investors to leverage the skills and experience of sponsors and spread the risks and rewards among a group of investors. House flipping. House flipping is a real estate investment strategy well known to those who have watched popular TV shows like those on HGTV. The concept is straightforward. You identify a property that is being sold under market value, often due to its condition, and then purchase it. The property is typically in need of renovations and improvements. Once you've renovated and enhanced the property, you sell it for a profit. However, house flipping can be riskier than other strategies, as several factors can go awry. If you overspend on your renovation budget or misjudge market conditions, you may not make a profit. You might even end up with losses. It's crucial to conduct thorough financial analyses and research before embarking on house flipping, particularly if you're new to this strategy. Consider partnering with experienced professionals to help mitigate risks and improve your chances of success. While potentially rewarding, house flipping requires a keen eye for property assessment and market knowledge. Real estate investment groups, REG. Real estate investment groups, REG, are businesses that focus on investing in real estate. These groups bring together the money of multiple investors to purchase and manage multi-unit housing or commercial properties. They may also engage in renovating and selling properties for profit. REITs differ from real estate investment trusts. REITs in terms of flexibility and the ability to adapt their investment strategies to diversify sources of capital. These groups are designed to be more dynamic and may change their investment approach based on market conditions. REITs often appeal to investors who want to reap the benefits of the real estate market without the responsibilities of property management. By pooling their resources, investors can access opportunities that may have been challenging to pursue individually. However, it's essential to carefully evaluate the management and performance of a REIT before participating, as the success of your investment will depend on the expertise and strategy of the group. That's it for today. If you enjoyed this video, make sure to hit that subscribe button and don't forget to give this video a thumbs up. Let us know your opinions in the comments below. Thanks for watching, and we'll see you in the next video.